Welcome to Alpha Wolf Capital. I'm Tim, and I want to personally thank you for stopping by. This channel is designed to help small companies, both public and private, gain exposure with potential consumers, investors, even partners. Take, for example, today's guest, CEO Jin Kang of Widepoint Corporation. Widepoint is a technology company, technology platform with three pillars that they work off of. Widepoint has cybersecurity solutions. Security is in their DNA. They have a identity management division. They have a managed mobility services and technology asset management division. And they also have digital billing and analytics division. Widepoint has been overlooked for quite some time, but with a large contract looming, this could be the turning point for Widepoint and one that is well deserved. But I'm going to let Jin tell you more about that in just a moment. This is not to be taken as investment advice. I am not a certified financial planner. This is for education and entertainment purposes only. I encourage everyone to do their own due diligence. Hey everybody, Tim from Alpha Wolf Capital coming at you with a longtime favorite. I've been Jin. How long have we known each other now?
Many years. I can't count that
high. Jin Kang from Widepoint, ticker symbol WYY, and this is probably one of the more perplexing companies that I follow because since I've known you, Jen, I mean, the company was in dire straits when you came in a long time ago. And I mean, dire straits, had a lot of debt, had a lot of issues, right?
Yeah.
This is nowhere near the company that it was. How long ago was that?
2017.
Okay, 2017. This is nowhere near that company, right?
No, no.
Hasn't been anything near that company for years, literally.
Yeah.
However, the stock has been ignored for the
Yeah.
most part,
Yeah.
right?
Yeah.
And then
Absolutely.
you've had some challenges. I mean, the COVID hit, that created some problems, but you've also had some amazing performance during some pretty trying times, right?
Yeah.
For example,
Yeah.
the census, right?
Yeah.
Which
Yes.
was
Yes.
during COVID,
Yeah.
flawless execution.
Flawless execution. Largest mobility management project in the world, involving 700,000 devices, configuring them, shipping them all out there, logistics, 24/7 help desk, collecting the data, configuring the software, bringing it all back, recycling, the devices, erasing all of the devices. And we did all of that without losing a single device, having a single device compromised, during a pandemic, right? So, we know our solution can scale, and we have, great solution and great people that can manage all of that. And they're talking about census 2025, Trump is, and there's also census 2030 that is already spinning up. The request for information came out last week, beginning of last week. So it's already in the works, and we're going to be teaming with CDW again this year for the 2030 census. And if there is a census for 2025, it would be, pretty smart for census to, rely on companies that already done it. And we know we have a solution that can meet their requirements.
Okay. So um, let's talk about. So the stock has actually had a pretty nice move here recently, right?
Mm-hmm. Mm-hmm.
And it is coming up into an area. This is always this is kind of like your resistance area. It's like
Mm-hmm.
$5, right?
Uh-huh.
If you can get above five and stay above five, I think, and just consolidate for a bit, that would be a good thing because you've actually
Mm-hmm.
had a pretty big move that needs to be absorbed, right?
Mm-hmm.
What gave us the move recently?
I think the move has to happen. And I think the move happened because there's a lot of things that are happening. One is our CWMS 3.0 recompete, which is our largest customer with Department of Homeland Security. That's a $3 billion contract that is coming up for renewal in November of this year. And the way that the RFP, the request for proposal came out, it essentially says, Widepoint is the only thing that they didn't mention is our company. They said the company starts with the W and ends with the T. Kind of it was that kind of hint. They came out with a best value to the government, and which usually means that they like the incumbent, and they're not going with the lowest cost, technically acceptable. And so we believe that we're in the driver's seat on this proposal. They also said that the company must be small business, under 1,500 people, which we meet. There are many competitors that are way above the 1,500. They cannot bid on this contract. They also said that the past performance of only the prime contractor can be used as past performance experience. And the other two things that they mentioned, which many smaller companies cannot meet, is FedRAMP authorized status, which we received at the beginning of this year
Yep.
after a 3-year process. So we know that hurdle is very difficult to climb. And then they also said the company has to have a top secret facility clearance, which we do have, right? And so we meet all of these requirements. And so we feel pretty good about it. And I think, our investor base who listen to our earnings calls, they probably heard that. And I think that that's a great opportunity for us. In the earnings call, we also announced that we have a lot of opportunities with our device as a service solution. And essentially what that is it's our fully managed mobility solution where including hardware, software, data services, contracts, 24/7 help desk, managing smartphones, tablets, any mobility assets that you want to use to help your staff to be able to work from anywhere, right? And we would charge a fixed monthly fee for that service. And our customers, all they would have, essentially they let us know when a new person is coming on board or when the person is leaving the company, and we take care of the rest of the situation. And so I think that that's gaining a lot of steam with Fortune 100 companies. As you know, much of our work has been in the federal government, but these opportunities are with, Fortune 100 companies, commercial companies, and it's starting to, gain a lot of steam. Our mobile anchor solution is coming online, and this is where we provide the most secure multi-factor authentication solution that is available on the market. And we're bringing that to the smartphone form factor for physical and logical access. And we have another solution that is spinning up what we call the M365 Analyzer, which is a license management software platform for Microsoft software. So as if you can imagine, the federal government buys millions and millions of licenses for Microsoft Office or Microsoft software. And what our system does, what our application does, it will go out and essentially scour all of our customers' IT infrastructure and identify how many licenses were purchased, how many people are using it, what modules aren't being used, and it would essentially find millions and millions, maybe even billions of dollars of cost savings opportunities, right?
Yep.
Now that our system has received, our intelligent technology management system has received a FedRAMP authorized status, we are starting to white label that and that application platform so that our customers can use that platform as software as a service and in a licensing model. So it'll be a very high gross margin opportunity. We're working with a couple of carriers, major carriers that will be using our platform to manage their customers' technology management asset. So there's a lot of exciting things that are happening. And, most of, we thought a lot of these opportunities were going to close, at the end of Q1 and in Q2. But things have slipped to the right a little bit. But these opportunities are real, and they should be happening in the second half of this year. So I think people are starting to recognize that, our company is here to stay. We are, continuing to improve our financial performance. I mean, in 2017, when we took over, we were losing something like $5 million on an adjusted EBITDA basis, right? And we were maybe a month or a quarter away from insolvency,
Yep.
but we turned it all around. We've been now 33 consecutive quarters of adjusted EBITDA positive. We are now six uh, 6 quarters, I believe, of free cash flow positive. We have $6.8 million in cash on our balance sheet, which should be really somewhere around 11 or 12 million. We're having some issues with our unbilled invoices, but that's starting to, we're working that down. So by the end of this year, we should have like 11, 12 million in cash. We have zero bank debt, right? And so, I mean, we are, a
And
pretty
Jen,
solid company.
how many shares outstanding?
We have something like 9.7, 9.8 million shares, outstanding. Insiders own something like 14, 15%. And if you count the directors, we're probably at 16, 17%. I myself own something like 6.5, 7%. I'm the single largest shareholder. So, and our management team, as I said, is somewhere around 14, 15%. So, insiders, our objectives are aligned with our investors, right? And we don't want to dilute, our shareholders, right?
Oh, speaking of dilute, so
Yes.
you filed an S3. Let's talk about that real quick.
Sure, sure. So yeah, we filed an S3, and the reason why we did that is because one, it's a good housekeeping item. As you noticed also that we did not put out a additional offering material because we have no immediate plans to raise capital, especially given my opinion is that we are undervalued, and I think if we win the CWMS 3.0, our stock could go $20, $30 a share. And so, perhaps when we get to that level, it may be a good idea to, smartly raise some capital, but we don't want to dilute our, shareholders.
So let's talk about that contract just for a second, because the
Mhm.
big difference is the duration and the number, right?
Yes,
Because
yes.
that's huge. I mean, that
That's a
means 10
huge.
years
Yeah.
you got that thing locked,
Yes, yes. It's a
right?
huge increase in size, right? So the 2.0, the CWMS 2.0 with the Department of Homeland Security was a 5-year contract. It
Yep.
started out as having a $500 million contract ceiling. Well, we, essentially worked through all of that. And so Department of Homeland Security actually had to put another 254 million onto the contract. And so they've already issued task orders that go out until November of 2026. The
Okay.
original contract, which was 5 years, ends in November of this year. Okay, so that was a $500 million contract. Then now the CWMS 3.0 is a 10-year contract and is for a $3 billion contract ceiling, right? That's a
Right.
huge deal. It's a single award contract. And if we get ramped up, we're talking about a $300 million run rate just for that contract
Right.
per year.
Right. That's no other business. That's just that
Correct. Just that piece, right? And so I think we were a little bit surprised because this is essentially doubling the size of the contract, going from 754 million over a 5 year. If you double that, that's only 1.5 million.
Right. Right.
But they went with a 3 billion, 1.5 billion to a $3 billion contract, right?
Yeah. No, that's
So So they're thinking that they're going to be putting additional, scope onto this, contract, and it's probably it's true because I think a lot of things that are happening, CBP, ICE, they're hiring folks. I think Superman is a Jin Kang. He signed up to be the ICE agent now, or right? And
Yeah.
so if Superman is going to work for ICE, the scope is going up, right? And they had, they got rid of the age restriction on being a, ICE and CBP agent, right? And so we believe that the DHS is going to get continuing to expand their mission to help secure the southern and the northern border.
Yep.
And my, I surmise that what they're thinking is that they're going to be using a lot of wireless, cellular, satellite,
Yep.
radio wave technology to secure the northern and the southern border. And if you're going to need that, you're going to have to put it on our cellular wireless management solutions contract, CWMS 3.0. And
Right.
so, and so I think the DHS is seeing that. This contract vehicle is going to be used for additional scope, additional hardware, additional software. And so that's why I think that they went from a $1.5 billion contract to a $3 billion contract. So this would be great for us.
So if you think about what you've done, the Fed ramp, which took 3 years for you to get
Yep,
accomplished, right?
yep, yep.
Um, I mean, all these moves that you've made were not immediate payback things. Matter of fact, they
Hmm.
cost, right? But
Yeah,
boy, was that
yeah. It's a huge
I think you
differentiator.
were clairvoyant, maybe.
Well, I don't know if you need to be clairvoyant, but security, cybersecurity, and mobility is not a partisan issue. And we knew when COVID hit, everybody is working remotely, and you need mobility technology, mobility as a service solutions. And I said that pre-COVID, and I'm saying that post-COVID. And I think we're here in the right place at the right time with the right set of solutions, right? And so, and
And
it's secure.
how long have you been working with them now? I mean, in total, right?
Yeah, when we started working with DHS, I was just coming out of college. That's it's been like 20 some years. I mean, it's been a long time, and we are a trusted, service provider for DHS. And
Right.
so we feel good that they came out with a best value versus lowest price technically acceptable
Yep.
because a lot of the competitors, what they'll do is they'll lowball the
To
contract
try and get it
proposal.
right.
Yeah, so that they can get it. But in this case, DHS in their wisdom, they said, hey, look, we need somebody who can actually deliver the solutions and a trusted service provider. And so, usually when they say best value, it does favor the incumbent, a well-performing incumbent. And so we feel good, but we're still investing. We built what we call a PMO model, program management office model, so that we have redundancy to make sure that our service level doesn't decline. Between now and November, or between now and 10 years from now will be November 2035.
I guess in my head, I'm thinking to myself, but you did tell me before we hopped on that it would not be unheard of for, let's say, if you do get awarded the thing, then you're going to have maybe somebody protest it, and
Yeah,
there's a whole
yeah.
process there,
Yeah,
right?
there's a whole process, and so in terms of the scheduling is that the draft RFP that was released for comment and questions stated that their DHS's award schedule would have been somewhere like at the end of September, beginning of October. So even if they do make an award on 1 October, what would happen is, probably the losing proposal writers and companies will probably protest the award, and then that may take another 30 to 60 days to resolve. And so we're thinking the final award may happen in December or January, February of next year. And DHS has already planned for this because they know the process.
Right.
Essentially, right now, our contract goes out until November of 2025, but DHS has already executed task orders that go out until November of 2026. And
Okay.
so, and they'll run these contracts in parallel. So as these, old contracts expire, they'll put the new task orders underneath the new contract. So they're already planning for that. And if there are no protests, as these contracts expire, they'll just put it onto the new contracts. And so we feel pretty good. We're not resting on our laurels. I mean,
No.
we don't have incumbentitis. We're working every day. We're working every day to deliver. And
Yeah.
so
No, like a lot, like I said, a lot of the things that you've done have positioned you very extremely well.
yeah,
Right.
yeah. FedRAMP authorized. They're you all you have to do is go onto their FedRAMP marketplace and see which companies are out there, which one of those companies are our competitors, and none of our competitors are on the FedRAMP marketplace, which means they don't meet the requirement, right?
Right.
So we feel pretty good. We feel pretty good. Um, and we have a great past performance with DHS. As I was a bald-faced boy when I was when we first won the DHS contract.
That's the
Uh,
thing. Who would risk? I mean, I would not want to be the person that made the decision to switch to somebody else
right, right.
and have that not
Yeah,
go well.
and they fall on their faces and they have to spend, years to try to get all of the integration points worked out. I mean, our systems are integrated with DHS's system, HR, inventory management, and so, when somebody leaves, it automatically sends us an email and we do all of the processing that we need to do to recreate all of that and make sure that the system is secure. If there's any kind of breach, God help you, right?
Right.
And so, we have great, platform. We have the subject matter expertise, and we've proven it over the last 20 years, right?
Yeah. I mean, that's and I guess maybe that's why I sit and think, I mean, yeah, your customers, your customer base has been primarily the federal government, but
Mhm.
now you are starting to go after some of this other stuff. And if they look at you, I mean, I'm just sitting here thinking if they look at you and say, wait a minute, this company's been working with the federal government for 20 years
Mm-hmm.
and have had no issues,
Mm-hmm.
maybe it would make sense for them to work with you too.
Yeah, yeah.
Right.
And that's exactly right. So, FedRAMP is specific to the federal government, but it tells you that our systems are, rock solid and bulletproof, right?
Yeah.
And we meet all of the data protection requirements. We meet all of the European GDPR, right? General data protection requirements. And we meet all of the ISO standards. And so they know our system's secure. You can rely on our system and it can scale, up to, probably a million devices, several million devices, mobility projects. I mean, we did it for the census project, which is the largest mobility project. So we know
Right.
our system can scale, it's secure, and we have the subject matter expertise to support it and train the folks how to use it. I mean, we feel pretty good. We feel pretty good about it.
Let me ask you a question, Jen. We've talked about this before, but this AI stuff is really starting to go. I mean,
Hmm.
AI
Hmm.
agents and this and that. And I mean, I'm using it every single day. I mean,
Yeah,
there's not a
yeah.
day that goes by I'm not using it. Right. So, how is that? Is that impacting your business in a positive way?
It is, it is. And what we're looking at is implementing some of the AI for, customer support, also doing invoice, auditing and all of those types of things, contract rates, analysis and such. And so we're looking at implementing those as part of our system. We have to do this thing very carefully because the use of AI and the data that is associated with, doing some of the data analysis. Um, so far, there isn't a coherent policy from the feds about the use of AI for these types of activities. So we have to move very carefully,
Yep.
but we see that AI will allow us to scale. Um, you know, just a simple example is that a 24/7 help desk. uh, Once you implement AI bots to be able to answer 90% of the customers' calls, you can see how we can scale our customer support desk.
Yeah.
It'll be one of these hyperbolic curves that would happen. And so we're looking at that very carefully, but at the same time, we're very careful not to overstep our boundaries on how that data is being used and analyzed. And once we get the policy from the feds, we will move out smartly on that.
Okay. We also, so you've made a couple of acquisitions. That was at one point it was a sore spot because,
Hmm.
and it
Hmm.
had nothing to do with you. It was
Yeah.
really the timing of when things happen,
Hmm. Hmm.
right?
Yeah.
That you didn't get the execution that you were looking for initially,
Hmm.
but those things are working now, right?
Yeah, yeah. And when we did the did the acquisition, this would have been like 2020, at the end of 2019, beginning of 2020, and we did the acquisition. And of course, what happened was COVID hit, right?
Right.
And so, but the company that we bought was IT Authorities, which did IT as a service, and it helped our customers to be able to again work from anywhere, right?
Right.
And had a great security background, cybersecurity, and we were able to layer on our identity management solution on top of that. And now we have consolidated the operation, removed the redundancy, and it added roughly $10 million in managed services. And so it was a good acquisition for us. It's still work in progress, but we've definitely turned the corner. And in second half of this year, you should see our financial performance improve. Um, we pulled back our guidance. We didn't pull it back. I mean, we didn't re-guide, but we did say that we're trending towards the lower part of that, our guidance. And the reason for that is because um, again, a lot of these opportunities, these material opportunities that we thought that was going to happen, that were going to happen in the first quarter and second quarter, has pushed into the third and the fourth quarter. So, um, um, but they are valid, opportunities, big opportunities, and
Right.
it's not a matter of if, it's just a matter of when. And so, um, and we are built for the long run. We have cash on hand. We're free cash flow positive, and so we're continuing to put cash onto our balance sheet. We don't need to borrow money. We have plenty of net working capital. And so, as you know, this ties into the S3 is that we filed the S3 in case that there is some favorable wins, WINDS wins, and wins, WINS. And when that happens, it may be we want to be able to be opportunistic, uh,
Yep.
but we have no intentions of diluting our current investors, as Insider owns, 15, 16, 17% of, the outstanding shares. And so it's all, going well for us. And it's just, as I said, it's just a matter of when and not if.
You know, I can't wait until your team, and the shareholders that have been in this thing for so long finally
Hmm.
get
Hmm.
rewarded for everything that it has
Yeah, yeah,
done.
yeah. And the thing about it is that um, I don't know how many companies, how many of these micro caps have a could be a run rate of $300 million a year, right? That this could be great, right? And we could definitely be a takeout target. And there's a
Don't
lot
sell
of.
too, Jen.
Mhm.
Don't sell too soon, please.
Oh yeah, of course not. Of course, of course not. But if somebody says, "Hey, Jim, how about, 30, 40, $50 a share?" We would have to bring it to you guys. We would have to bring it to the investors and say, I don't know. I think we're still undervaluing ourselves, but I have to put it in front of them, right? And they can decide. And likely, if it is an acquisition, if we do get acquired, I'm sure that they're going to give the opportunity to continue to ride the Widepoint train. And so, this is an exciting time for us because, one, we have plenty of runway. We got cash on our balance sheet. We don't have to borrow money. We don't
No
have to
debt.
raise capital, no debt, right? And so, it's an exciting time for us. And we got a lot of material contracts pending, that could come in here anytime. And just keep your ears open for our press
And
releases.
those would be, I mean, when you say large, I mean, they would be game changers, right?
They will be game changers, and it will be very high margin business. We're talking SaaS revenues,
Yep.
DaaS revenues, device as a service revenues, and it will be very, very high margin stuff. And our objective is to get all of our non-carrier services to get to somewhere around north of 50%, 50% and above. And some of these opportunities may take us there very quickly.
This would be one of those like 20-year overnight successes.
Yes, the 20-year overnight success. That's right. Yeah, I mean, I've been in here. I mean, I've joined the company back in 2008 when I sold the company, and so it's going on 20 years. And a couple more years, I would have been here. I will be here 20 years. But yeah, we're excited. I mean, the management team's excited, the board's excited. And yeah, the CWMS, 3.0 is a big, huge deal. We got a SaaS deal working with one of these major, carriers. We got, device as a service with a bunch of, Fortune 100 companies. So yeah, there's a lot of exciting things, a lot of excitement.
Any other? So you have something else that is is coming up in 2028, right? That
Uh,
could
20,
could
2028
possibly
to 2030, which will be the
20.
census 2030. Yeah, I mean that's
Yeah,
a huge deal, right?
yeah,
This is another one of those things, we were the first here in that the census 2020 was the first time that handheld smartphones were used to take census.
yeah.
They've been trying that like 10 years before then, the 2010, and they weren't able to do that. 20 in year 2000 they were trying to do that. This was first 2020 was the first census where they were able to do that and accomplish that. And so, if you are the census department, would you go and find some new contractor to do that? I mean, it's risky, right? And so,
Right, right.
I think we have the inside track. We're the team to beat on the census 2030. So a lot of good things happening. And we're not going to get out of business anytime soon. We got
Oh,
plenty of cash. We got plenty of cash. Good, we got a great team, great management team. Who know how to operate and grow the business. And we're doing it without going out and diluting our investors. We don't have to raise capital for operations. Zero
you,
debt.
you know what, Jen? I'm just
What can
going to
I
say
say?
this. I'm going to say this, right? Uh, Even with your shareholders, you've had some people give you a pretty rough time,
Oh yeah.
and and I have always felt, look, I think it's easy to be a Monday morning quarterback.
Of
It's
course.
really easy to be a Monday morning quarterback because you're not dealing with what you're dealing with, right?
Hmm.
Everything's always hindsight's always 2020. You know,
Yeah.
it's like, oh yeah, I can see everything clearly.
Yeah.
You've done a phenomenal job. You really have,
Thank
and
you.
you haven't been rewarded with it. And you've got to try and make people understand that this is this is a little harder than you might think it is, right?
Yeah. Yeah. Yeah.
I love the fact that you're still here, man. I mean, you're
Yeah.
still here, and you deserve the recognition that I think will come.
I think it's coming. I think it's coming. It's
Yeah,
this
I
year.
mean, you deserve that. Not just you, but you and your
Our
team,
team,
right?
yes, of course. Yeah.
Yeah. I
Yeah.
mean,
Yeah.
I
As a
have,
public
I have,
company CEO, yeah, you got to have thick skin, and you got to go the distance. That's it.
yeah, and you
Just wake
do.
up.
I mean,
Yeah.
you answer, you pick up that call. You have never once ever
Hmm.
tried to avoid my call, whether it was
No.
a good
Whether it's
conversation,
good or
bad
bad,
conversation.
I'm taking the call.
Yeah, I mean, look, and I appreciate that,
Yeah.
right? Because there are a lot of guys that when the shit goes south,
Yeah.
you can't get in touch with them.
Right.
They're not answering the phone,
Right.
right?
Right.
You've never been that way. You've
Yeah.
always been very
Transparent.
transparent and straightforward and saying, look, did this work? Not right now, but we haven't given up, right?
Yeah.
I mean,
Yeah. I mean, we've been following this K through 12 for a long time. We finally announced that we're working with the Department of Education for their identity management piece of it. And again, it's just we don't give up on any of this stuff because we know that they're valid and we take a long-term view. And as a public company CEO, that's what you have to do. You have to, hit some of these, interim targets, but you have to set these goals that you're going to reach over time and build long-term value. And I think our management team is doing that. And we're going to get some recognition soon.
yeah, you are. You are. I mean, look, you're very even keel. I
Mhm.
mean, you don't just you stay balanced, and that's what I like about you, right? I mean, look, good or bad, you're doing what you feel is in the best interest of the shareholders and the company,
Yeah.
right? You don't want to hurt the shareholders. You're aligned there, right?
Right, right. If,
I
if I
mean,
hurt the shareholders, we hurt the management team, right? And of course, we don't want to hurt you, Tim. As a long term shareholder, we don't want to hurt you, right? So, I hope you understand that.
now, Jin, I really do hope that, like I said, I really want to see the shareholders that have stuck in, and I want to see the management team, and I want to see everybody get rewarded
Yeah,
for
yeah,
what I think has been. We talked about this before you hopped on. When I first so here's a technology company that when I first got involved with you guys, I went to your website and I thought, holy shit, this looks like a website from like 1970.
yeah. Hey, we were government focused, public public sector focused, Oxford shoes, wingtips, and button down shirts, you know. But
Oh,
we're coming into the new millennium, the year 2000.
it is now a very, very different. When I said at the beginning of this thing, this company is nothing like what it was. I mean, in every way possible, it's nothing like what it was, right?
Yeah, yeah. I mean, we got a great solution. We got a great platform, and we got material opportunities. And now, we're generating more cash. We'll be able to invest more of that into sales and marketing. And we're doing that. And come November, December of this year, hopefully we'll be able to announce that we have won the CWMS 3.0. And we'll build on that sum. And all of our DaaS and our SaaS solutions are starting to pick up steam. Hopefully we'll show earnings per share positive, and I think we could get there too. Maybe dividends. Can you say dividends?
Ooh,
Or maybe
wow.
right. I mean, we're feeling pretty good. We're feeling good about our prospects because there's so many opportunities that we have in our sales pipeline. And Jason Holloway doing a great job, as Jason. And
Yep,
of course,
yep,
you met Todd, our COO.
yep.
Yeah, he's delivering keeping the customers happy. Our renewal rates for our customers like 95% plus. And so everything is going well. Yeah.
Yeah. All right, Jen. I know you're a busy man. What do you think we should do a follow up?
Um, like right after our third quarter call. That should be like in mid-November. And I think we should do it right after that because I think there'll be a lot of developments, after mid-November.
Right. Okay. Thank you so much for doing this, Jen. I appreciate you taking the time.
Thank you, Tim. As always, thank you for your time and your support as always.
All right. Hold on a second. You feel as though I missed anything?
No, no, I think it's great.
Okay.
Yeah.
All right. Hold on a second. I'm going to shut this off. Thank you for tuning in to another CEO interview here at Alpha Wolf Capital. Today we had Jin Kang from Widepoint Corporation. Ticker symbol WYY. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, make sure you smash that subscribe button. All of those things are extremely important to us here at Alpha Wolf Capital, and we appreciate you taking the time to do that. Until next time, stay safe. Alpha Wolf Capital wishes you the very best of success.